behavior of every account, every nature of asset, every nature of asset account, every nature of liability account, every nature of expense account. So this behavior I have to show you that journal entry, how journal entry is prepared. So now 11th entry we are making, like, after 15, after 1 month, the customer is paying the check. Yeah, the collection of customer is business is collecting. This businessman is collecting check from the that customer, and that is of rupees 80,000. He was the accountant has recorded the has customer value as customer selling sales value as at rupees 80,000, and that amount is now collected at in the bank by rupees 80,000. Same to record, the narration would be recorded in the accounting entry is to record the collection in the bank account of sale of trading inventory from XYZ customer on 15 March after 1 month. So the bank account is receiving the balance from that customer. So bank account would be upgraded, would be increased. The current asset account will be increased by rupees 80,000, and that receivable account which was earlier created by 80,000 has now reduced to by the 80,000 rupees, and that receivable account is now net off from the original balance. At this moment, at 15th March 2024, the receivable account ledger balance would be zero because it was earlier debited by the 80,000 and now credited by the 80,000. So definitely difference would be nil. And number 12th entry we are making journal entry, like to record the building insurance policy paid in advance to insurance provider TPL company, uh, TPL company for the tenure of 12 months. Basically, insurance. Why company need insurance for the any business? To mitigate the risk, to reduce the risk of loss. Company acquire the insurance from any insurance company, so that insurance covered for the certain period, that can be a 12 month, that can be of the 5 years, 2 years. So that policy depends, the policy tenure depends. So insurance policy in this scenario from TPL company vendor, that is provider of the insurance company, is taking the insurance policy of 12 months, and it is the rule of the insurance policy that to pay in advance of the whole year of that insurance amount. So this accountant is now recording that amount which is recorded as a whole of rupees 1,20,000 as a prepaid insurance, which is recorded as an asset at the date of 1st June 2024. 1st June 2024 date is the policy start date. So he is recording the prepaid insurance as a debit by rupees 120,000, and the company is paying the check to the TPL company 120,000 check. So bank account is credited by 120,000. So one asset is increased, one asset is the other asset bank account is nature is decreased. So this is how the double entry accounting system works. And you know that we are making the financial transaction between the date of 1st January 2024 till the 30 June 2024. So this at the date of 30 June 2024, company has to expire some of the insurance value which pertains to that particular month. So insurance policy was for initially acquired for 12 months starting from 1st June, but at the date of 30 June 2024, 30 days or 1 month insurance expense has been expired from the initial 12 months. So that expense has to be recorded in the profit and loss to expire that insurance, and remaining prepaid insurance will remain in the balance sheet as an asset to that organization. So insurance expense is debited by 10,000 rupees, and prepaid insurance is reduced by 10,000. Earlier we have created prepaid insurance by 1,20,000 rupees, and now prepaid insurance are being credited by 10,000. So remaining prepaid insurance balance would be in the prepaid insurance account. In the separate ledger of the prepaid insurance account would be 1,10,000 at the date of 30 June 2024. So we will see the ledger of that prepaid insurance in our future slides. So moving on to the next slide, that is we are making the 14th entry now. 14th entry, what to record the depreciation expense of 6 months out of the building life of 6 years. That is 600. Company has acquired the building at the cost of 600,000 at the very initial date, that is 1st January 2024. The company has made the transaction of increasing the capital by injecting 600,000 as a building cost. So that building cost has to be set off uh, in the 6 years. It is a accounting rule to reduce the asset cost over the period of life of the asset. Basically, depreciation concept, why it is depreciation concept is being introduced in the accounting system. Actually, if the businessman records all the asset as an expense in a very next day and in a very first year, so that expense, if for that period, profit and loss would show the highest expense value. If he record all the asset value as an expense of that particular period or for that particular month. So basically, international accounting rules says that whatever the asset value in has to be recorded in the asset side of the balance sheet, but it should be reduced by equally major side, in equal proportion to the life of the asset. In this scenario, I have shown that the building life is 6 years, and after 6 years, this building value of cost value will be eroded from the balance sheet. It will be zero in the balance sheet. So on sixth year, the whole 6 lakh would be depreciated, and the asset value in tangible form will be available to use by the business, but in the books it is reduced. It would be completely depreciated from the accounting system. So that for to record the depreciation at the first year, so it is 600,000 divided by 6 year, that is 1 lakh per year. But we are starting our business from the 1st January to the 30 June, so it means that it was for 6 months we have used that building for our business purposes. So the depreciation would be applied by 6 month proportionate, or then 6 month proportionate of 1 year, 1 lakh rupees, 100,000 rupees per year would be rupees 50,000 for 6 month depreciation of the building. So entry would be depreciation expense debit, and accumulated depreciation, which is also called as contra asset account of that vehicle, of that building. So accumulated depreciation building would be credited by 50,000 rupees. I will show you how the behavior of the accumulated depreciation and how it will be over set off from the original asset of the asset account. So now, if we move on to the 15th entry, that is the last entry of our example, to record the depreciation expense 6 months out of the vehicle life of 5 years. And that is, you can say, the vehicle which company acquired at the very start of date, that is of cost rupees 100,000 rupees, that is 100,000, and it would be divided by 5 years. So 20,000 per year depreciation would be applied to reduce the asset cost at after each year. So as I said earlier, to proportionately apply the cost of the asset uh, as a depreciation expense. So for vehicle related expense, we have to record for the 6 month of depreciation in this scenario, because we are maintaining, we have started the balance sheet, we have started the business on 1st January to the 30 June. So depreciation would be applied at the proportionate of 6 months, and this 20,000 is per year depreciation of vehicle. And if we divide by 6 months, so it is going to be rupees 10,000 in the depreciation expense debit by 10,000, and accumulated depreciation credit by 10,000 rupees. This was our last entry of all the scenario. Now we will move on to review how the general ledger of every account reflects, and how the profit and loss behavior for profit and loss is showing for all these transactions, and how the balance sheet is being shown after doing all these routine transactions. So the next we are slide is general ledger, that is separate ledger of the bank account. Every account has its own subsidiary, has its own ledger, and in that ledger covers all the transaction that is pertaining, that is being recorded in many days, sequential on sequential basis it is being recorded in the ledger. So on 1st January, it was initially capital invested by the businessman, that is 200,000. After it is reduced by 100,000 rupees to ABC vendor. So that 200,000 reduced by 100,000, and remaining 100,000 was available in the bank account of the company. And after that, 80,000 received in the bank account as customer collection. And then after paying the 120,000 to the insurance company, the running balance have been reduced consequently. It was initial and at the 200,000, but if we say that 1st of June 2024, the company bank account balance is rupees 60,000 remaining, and this is the balance which will be shown in the trial balance at the 1st June 2024, and as well as no transaction activity performed after 1st June 2024 till the 30 June 2024. So this balance will also be reflected on the date of 3 June 2024, 30 June 2024. So now next ledger, we are going to review that prepaid insurance as a separate ledger. Prepaid insurance were acquired by rupees 120,000, but after expiring of 1 month insurance, as per because it was acquired on 1st June 2024, and now right after one first month, insurance was expired by 1 month transaction. So 1 month insurance expense was rupees 10,000, and after reducing 120,000 by 10,000, so the remaining prepaid insurance which would be expired in the next year, or next financial year, that is from 1st July 2024 till the next financial year. So that insurance would definitely be expense in that relevant year. But now at 3:30 June 2024, the prepaid insurance as an asset is recorded in the system at in the balance sheet side at rupees 110,000. Now we are talking about the payable vendor when it was a vendor account ABC Company Limited. We paid initially, liability was created by rupees 100,000 for delivery vehicle purchase of the delivery vehicle. So liability, whenever liability is increased, so it is credited, and running balance is shown by negative, that is minus balance, minus 100,000. That minus sign shows that the running balance is going negative, and credit side are heavy, and if it is plus 100,000, so it is showing that the debit balance, it is showing the debit balance of that ledger. So after paying to the ABC Limited on 2nd February 2024, that amount has been completely set off, and the value was value of that payable was reduced on 2nd Feb, and the value now is nil in the ledger of the payable. Nothing has to be paid after 2nd Feb 2024, that because all the liability have been paid to the vendor on 2nd Feb, and the running balance is zero, and it that zero balance will be shown on the trial balance and as well as in the balance sheet and all the accounts. Now moving on to the to review the what is the now situation, what is the behavior now, what are the trial balance reflecting after doing all previous transactions. So the current asset bank account is showing as 60,000, which we have seen in the ledger, which we have seen in the general ledger, and as well as we have seen the cash in hand 70,000, it is reflected 70,000. Prepaid insurance we have seen 110,000. So all these asset balances are which are in the ledger at 30 June are reflecting here. And trial balance is basically the one page statement of all the account. Trial balance, in its name is shown as it's a trial balance. It is not for the confirm. It is a trial and error track. So trial balance is basically the balances of all the transactions, all the bank accounts, all the accounts which have been created in the business. So that chart of account balance are at 30 June 2024 are reflected at the trial balance. Trial balance would uh, ever be as recorded as at trial balance, not for the period, because trial balance shows the accurate balance as of date, not for the period. It is reflecting the date balance. The date balance are like 30 June balance bank account showing 60,000, 30 June balance cash in hand account balance showing 70,000, 30 June balance prepaid insurance account showing a 110,000. Similarly, land and building balance showing the 600,000. These are the accumulated depreciation building is showing 50,000. Now moving on to the trial balance next side, that is liability, equity, expense and sale. Liability have been paid off completely, so this is reflecting by rupees nil, that is zero, and equity as it is, whatever we have created the in the journal entry are reflecting here as at same value, that is 1 million rupees, and all the expenses which we have recorded are reflecting here on the debit side. Cost of sale are shown as 50,000, depreciation expense and electricity. There are multiple journal entries are being created, uh, but in any day you are passing different entries, but trial balance is showing the cumulative balance as at any date. So the electricity expense, insurance expense, salary expense, depreciation expense, this is the cumulative balance of all the transactions. After that all the transaction running balance are reflecting here. So you have to see what the running balance is showing in the ledger would be definitely shown into the trial balance. And as we have seen that we have recorded all the journal entries debit and credit equally, and we have not made a transactional error that we have recording debit transaction by higher amount and we are recording the credit amount by lower amount. So this is not a perfect accounting entry, and it cannot be recorded in the system. Debit and credit should always be equal to make the journal entry, and after doing all the correct entries, the trial balance is showing the correct figure at the bottom, that is debit total should be credited to the credit side of the trial balance. If this debit side and credit side are not equal in the trial balance, so definitely it is not a good accounting practices. Somehow you have done some wrong entry, so that unbalanced entry, it is called unbalanced. If you have passed some unbalanced entry in the system, so this trial balance footing would be not be equal. In this scenario, we have done all the entries, and the debit total is 1,140,000, and credit side is showing the total of 1,140,000. Now moving on to the profit and loss section. After watching the trial balance, now we are making trial profit and loss from that trial balance. And that is profit and loss is actually based, what is mean by the profit loss. Company run the business to achieve some targets and to earn some profit. So if they are not making profit, so they are definitely producing some losses to the organization. So that can be vice versa in any case. If the sales are higher than expenses, so that the bottom balance would be profit. But if the expenses are overstated, or expenses are higher than the sales, so this position shows the loss to the organization. So in this scenario, what we are watching, that the expense side, that is heavy, that is higher than the credit side. Sales we have created by rupees 80,000, but expenses we have incurred in this 6 month period, that is rupees 200,000. And difference, if we see whatever loss we have obtained in this 6 month period, that is 120,000 to the business. Now this is showing the performance of the company. And profit and loss statement is also called in international accounting standard as statement of comprehensive income. It is a new name to the profit and loss. Now we are talking about the balance sheet as at 30 June 2024. In International Accounting Standard, it is balance sheet. Now new name is being called as Statement of Financial Position. It is a financial position as at 30 June 2024. So 30 June 2024 balance sheet is showing the current assets are of the value, like bank account is showing the 60,000 balance, cash in hand showing the 70,000, prepaid insurance is showing the 110,000. This asset side is shown is same as of it is extracted from the trial balance. Basically, first we prepare the trial balance. We are not making the trial balance. Actually, it is in the accounting software. Trial balance is auto generated from the journal entries. We are making just journal entries, and journal entries are being carried forward to the trial balance in the software itself. And that trial balance is creating the balance sheet and profit and loss account separately in the accounting software. So to know, to have a clear picture of the balance sheet, I have described it in a simplest way, that the balance sheet has been subdivided into the asset side and liability and equity side. We will discuss liability and equity side in the next slide, but here we are discussing about the asset side. The asset side of the balance sheet is shown as a total assets of 8,80,000, 880,000 rupees. In this, 240,000 is current assets and 640,000 is non-current assets. And yeah, as you can see that land and building rupee is shown as rupees 550,000. It is actually the initial cost of building was 600,000. The businessman has invested his land and building at a cost of rupees 600,000, but after depreciation, its value has been reduced to 30 June 2024 at rupees 550,000, because 50,000 depreciation is applied to the depreciation expense in the profit and loss. Similarly, vehicle asset has been reduced by 10,000. It was 100,000, but after 10,000 depreciation expense was charged to that vehicle. So now balance sheet is showing the assets, the fixed asset at 640,000 and non current assets at 240,000. Now we can talk about the current liability position at the of the in the balance sheet. Balance sheet is showing the nil liability to any vendor. We have paid completely to the ABC vendor. We have paid almost all salaries. We have paid all the BMW liability in this financial year. So if the liability was remaining in any sort of, so this current liability portion would be shown by the remaining balance amount. But in this scenario, all liability have been paid off, so all the current liability is shown as zero balance. Similarly, if we talk about the equity side is shown by the capital and retained losses. Uh, some businessman has invested capital of rupees 1 million rupees into the accounting system, but after incurring the loss of 120,000, its net worth has been reduced in this financial year uh, by 120,000, and now the asset and accounting question says that asset minus liability is equal to equity, that is called the net worth of the organization. So net worth of the organization currently is shown as 880,000, which was earlier at the start of the capital was 1 million rupees. So after incurring some losses, its net worth has been reduced. But in future, next year, if the sales are increased and expenses are reduced, so definitely this position can be reversed and retained losses can be converted to the retained earning. And definitely it would be fruitful for the company to have a better financial position at that moment of time. So this is all from my side. In this all this slide, you have learned the how journal entries are being prepared, how the trial balance are being connected to that GL entries, and after that trial balance are linked to the profit and loss and balance sheet, and we can say that the performance of the company can be judged from the profit and loss, and balance sheet is the net worth position to the organization. So this was the second lecture from my side on the international accounting basics. So hopefully we will connect you in the next upcoming session, that would be lecture 3, and we will also cover the other side of the financial aspect or to the accounting as well. Thank you for watching me on this channel, Financial Education by Sheikh Danish, and subscribe this channel for onward updates and in touch with me. Thank you very much.